So, Friday felt like a breath of fresh air on Wall Street. Stocks surged, records broke, and for once the mood was pretty good. Hey everyone, it's Saturday morning, October 25th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management, Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now the big headline, inflation finally came in cooler than expected. The September Consumer Price Index rose 3% year over year, which is still high, but a touch softer than economists had predicted. Month over month, prices were up 0.3%, again slightly below expectations, and that was enough to keep Wall Street smiling. The Dow climbed about 1%, the Standard & Poor's 500 gained 0.8%, and the Nasdaq jumped 1.2%, all closing at fresh record highs. The inflation data was actually delayed for over a week because of the government shutdown, so this was the first real piece of economic news traders could sink their teeth into. And it didn't disappoint. Investors are now basically convinced that the Federal Reserve will cut rates next week, and most see another one coming in December. Experts say we're looking at a nearly 99% chance for the next move to be a rate cut. Meanwhile, President Trump stirred the pot again, announcing that he's canceling trade talks with Canada after Ottawa ran an ad campaign mocking his tariff plans. You can't make this stuff up. And in corporate news, Intel posted stronger than expected third-quarter results, topping Wall Street's revenue estimates. The company said it's well positioned to play a bigger role in artificial intelligence, which helped boost investor optimism even more. So yeah, cooler inflation, rate cut optimism, and a market hitting new highs. Not a bad way to end the week. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.